Okay, let's get started. Let's, let's get started. Let's get started. Let's get started. Let's get started. Uh, this streaming live now. I was trying to get this meeting, our YouTube channel. So today we are now starting our trading journey officially, and the start of the journey is a little bit going to start from indicators, a few of them. Then after indicators, we are going to go back to support and resistance. So that's where we are going to start from. Uh, if you can share the link, may I did not share the link anywhere. Me, I did not share the link anywhere. So if you can share the link, any platform, you will have done those people a very good service. Basically and purely, I want to welcome you all to yet another series. Starting from today, I will be a little bit slow. Yeah, I'll be a little bit slow when it comes to these trainings. And my goal is just to make sure that enough people can understand what we do and how it is done. And so, versa V, you'll be able to find that I'll be basically very, very slow. Okay. I'll be very, very slow when it comes to, I'll be very, very slow when it comes to trainings. Okay. Um, so let's start. I may not wait any other longer. So let's get started to the call. Uh, make sure, make sure to make sure that right. I'll share my screen and then the journey starts. Yeah. All right. My screen is clear. I'm not using a font simply because now uh, I'm I'm trying to change the mjeko kayeni ajakaba. Take to mommy. Take to mommy. Okay. So let's start. So on my screen, what you are able to see is an application called TradingView, which I did not use this time around when I was starting my classes. And what you are able to see on my screen in the chart, yesterday I was able to define what trading is. And I basically said that trading, or specifically technical analysis, is this ability to look at, to use data. Okay, it is using data basically. So using data is what basically and purely is what trading is all about. So us using data to find what happened in the past and predict what will happen in the future is what trading is all about. And so, when we are talking about technical analysis, I want to start from this side of indicators before I go back to candlestick charts. Because I now discuss candlestick charts, and I'm going to discuss time frames. But I want to start from indicators, because indicators are going to help you and me to know which direction a particular coin is taking. I'm not going to do all of them. I'm just going to do a few of the most important. And I'll look at indicators like relative strength index or RSI, moving averages, Bollinger Bands. Basically, these indicators are going to help us gauge the momentum of the market and also the trend of the market. Then after, we shall get back to support and resistance, and then go to trend lines and chart patterns that will help us identify either whether the market is bullish or bearish. Tomorrow, I'll be done with the most important ones that I want to start from. Okay? So basically, I'll get off this and The challenge is that this is not a paid, but let me see if I will run payments. Okay, so this is a chart. A chart is just the history. And the history is important because it helps us determine the future. But at the same time, versa V, before I go to the history, we have a very important thing called time frame. And all of you on the top of my screen, you can see me circling time frames. And these time frames that you see, we have 1 minute, we have 3 minutes, I have 5 minutes here, 15, 30, 1 hour, 4 hours, 1 day, and there is an arrow that says so on. So there are other time frames. But it is important for you to understand why should a trader choose a specific time frame. For example, trades from 30 minutes, 30, 15, 5, 3, 1 minute is what we call day trading. You are this type of a trader who wants to pick a trade, and before the day ends, you want to get out. Versa V, a trader who picks 1 hour, 4 hours, and 1 day, they may not be able to move out of those trades in 1 day unless there is good momentum in the market. But they will always get away from the noise that happens in these other lower time frames. Number 2, people who trade in such time frames may spend 2 or 3 days in a trade, but they will always take significant profits. So in simple terms, I usually want to define this in an approach that tries to give a better understanding to everybody. I do not want to complicate it, although I'm not going to dig deep into these indicators because I will still have to repeat them as I continue with my classes. But if I have one candle and it is in 1 minute, it means when I come in 3 minutes, I have 3 candles. I would have 3 candles, each of 1 minute. Each of 1 minute that make up 1 candle of 3 minutes. If you are, then it keeps on and on and on and on like that. That if I come in 15 minutes, I would have 3 candles of 5 minutes that make up 1 candle of 15 minutes. In short, what I mean is this, that when I come in 30 minutes, I would have 2 candles, each of 15 minutes, but now I have 1 candle of 30 minutes. If I come in 1 hour, I would have 2 candles of 30 minutes, but I have 1 candle of 1 hour. When I come to 4 hours, I would have 4 candles of 1 hour, but I have 1 candle that is representing 4 hours. In simple terms, when you look at the market in a bigger time frame, you are having a bigger picture. And when you are looking at charts in a lower time frame, you are having a smaller picture. Am I making sense now? Is it clear? When it comes to time frame, give me a yes in the chat if it is clear. Give me a yes in the chat if it is clear. Please share our live to people who have not been able to attend here so that they can go and attend the other side. Someone is said is lost. I think I need, before I teach, I think before I teach, I needed to work on people's minds because sometimes the ability to understand gets back to I don't know. Mm-hmm. Okay. People are saying the meeting is full, so let me cross share the Zoom. But it also this side on YouTube it's clear. So you can join on YouTube. You can join from the YouTube live and be able to still have the same. You know, I needed to work on people's minds because I've seen so many times when you simplify something and still someone still gets confused. So I still apprehend. Hey, why are you spoiling? Okay, yeah. So take this. Have it. Okay. So if I check 1 minute and then I check in 3 minutes, it means that if I was in 3 minutes, I would have three candles each of 1 minute. If I was in 5 minutes, I would have five candles each of 1 minute. If I was in 15, I would have 15 candles each of 1 minute. 15 of them. Like that, like that. If I was in 30 minutes, I would have 30 candles each of 1 minute. If I was in 1 hour, I would have 60 candles each of 1 minute. If I would be in 4 hours, it would be 60 times 4. I would have 240 candles each of 1 minute. Am I making sense? But instead of me having these, I have one big candle for 4 hours. Is that clear? Is it clear now? Is it clear now? So, is it clear now? So when you decide to look at the market in the 4 hours, and I decide to look at the market in 1 hour, you are just having a big picture. And me, I'm just using a small picture. Is it clear? Is it clear now? As simple as that. So this means that, look at this. I'm in 5 minutes. And all of you can see the market moves up, then moves down, then moves up, then moves down. When I look at the same thing, the same coin in the 4-hour time frame, things may look different. Things may look different. The person who traded in 5 minutes has already made money, but the person who traded in 4 hours is still waiting. But the difference is the person in 4 hours might take a bigger profit versus the person in the 1 hour time frame. Am I making sense now? And it's so 4 hours, 1 hour, 1 day is a bigger picture. 5 minutes, 1 minute, 3 minutes is a small picture. And I've told you the advantages of each. Looking at the market in a smaller time frame and looking at the market a bigger time frame. Here, I want to enter trade and leave it fast. As it is the same way I would trade in a bigger time frame. But in a bigger time frame, I might stay in a trade longer, but I will avoid the noise. Because when I come and I look at the market in the 1 minute, the trades are too fast. Okay, trades are too fast. Okay. Especially if a coin has a very good momentum. Trades are too fast, things are happening very fast. Because whatever is happening in a 1 minute time frame. I hope that is clear. So you always have a personal decision to either use the bigger picture or use the smaller picture of the market structure. Give me a one in the chat if that is clear. Then we continue. Someone is saying repeat. I will not stay on something. Now let's start. When we are trying to trade, one of the most important thing is trend of the market. And we have indicators that can help us know the direction of the market. And one of the most common that we are going to look at are what we call the moving averages. The moving averages. The moving averages. The moving averages are very, 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 very important indicators, in especially giving what is expected on a particular coin. And moving averages are basically very good indicators. But when it comes to moving averages, but can you go now and do work? Because you need to go and do your work. We are done with you now. So moving averages. Let me finish. I'm coming. Okay, if you want. The student sometimes becomes a very, very not easy person with me, but we move. Okay, so let's go into moving averages. Moving averages, they are divided into two. Like I'm going to go into details about them, and I believe tomorrow I'll be just finishing. Moving averages are divided into two, and these are common tools when it comes to technical analysis. They usually They usually define trends of the market and help traders to assess the direction of the market by calculating the average price of the asset over a specific period of time. So if we want to know the average price of an asset over a specific period of time, we are going to be using what we call the moving averages. Okay? And so, moving averages will also give you whether this coin is on an uptrend or this coin is on a downtrend. I have not yet defined the trends, but I believe tomorrow I will dive into trends to make it very clear for someone. But these moving averages are divided into two. We have what we call simple moving averages, the SMAs, and we have what we call exponential moving averages, the EMAs. Now let's define the two. The simple moving averages is calculated by adding up the price of this particular coin by a certain number of periods and divide the total. For example, if we talk about a 10 moving average, it means that we shall use the closing prices of the last 10 days divided by 10, the closing prices. Then, when we talk about exponential moving averages, but for me to make things very easy for someone, moving averages or the simple moving averages will not usually give you a lot of data. They will always just give you what happened in the past, but they will not give you what happened in the past as what is happening now. So they will only use the data of the past. Vis-a-vis exponential moving averages, which I'm going to show you, because for them, they will always use past and recent data. That's why I usually recommend that traders use what we call exponential moving averages. Take to mommy. Take to mommy. Yeah, take to mommy. See. Take to mommy. Take to mommy. Yeah, I don't know how to use it. So I would basically recommend, guys, just a minute. The student is very tough. So, Ambrian, I'm wasting. Go to mommy. The mom no na genda kwa. Go to mommy. Yeah, just a minute. Just 1 minute. Mommy's gonna give you a phone. Mommy's gonna give you a phone, baby. Mommy's gonna give you a phone. Okay, sorry guys. Sorry. It was not usually my intention, but I have nothing to do. Okay. So So we basically have simple moving averages and exponential moving averages. Now these ones, they only give you past data. These ones will give you past plus recent. So these ones are more potential. So simple moving averages identify the whole trend. The whole trend the overall trend. So they do not give reaction to recent prices. While exponential moving averages, they will give you more weight to recent prices, making it more sensitive than the simple moving averages. Exponential moving averages will help you to detect trends, reversals, or quick price movements since they respond more to quick market changes. So we are going to see all of them. Now, what do we use moving averages for? One, they help us to tend the trend. They define the trend. They are trend indicators or trend identifiers. Why? Because it is just a smooth line, like we are going to see. It's just a line like this. And when coins are forming above it, candles are forming above it, then we say a coin is on an uptrend. An uptrend means the market is going up. And when candles are forming below it, then we say a coin is on a downtrend. Downtrend means the market is going down. As simple as that. So they identify trends in the market. When candles are forming above it, we say the coin is on an uptrend. When candles are forming below it, we say coin is on a downtrend. So they are very important. They also form what we call crossovers. When a short-term moving average, for example, a 7, crosses a longer moving average, for example, a 14. So a 7, a 14 is moving like this. Dun, 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 dun. Then as it is enjoying its journey, 7 comes. So this one is called a crossover. This one is called a crossover. It means that a 7 moving average that has been looking at 7 candles has crossed a 14 moving average that is looking at 14 candles. This cross is what we call a golden cross. Is what we call a golden cross. And it is a bullish signal. This one is a bullish signal. It means that we expect the market to continue going up. And when this 7 moving average, like they closed from here, they closed here. Then things continue. Then the 7 was like, 7 was also continuing. Then they reach somewhere here. And they cross again. Now this one is called a death cross. It occurs when it crosses and remains below. It crosses and goes below. So this is 14 and this is 7. This one, it means that it's now a bearish. The market is going to go down. So that is what happens. Number 2, moving averages, or number 3, moving averages act as support and resistance. The line is moving like this. And the coins are tapping the line, going up, tapping the line, going up. It means that this one is a support. We are going to discuss support and resistance in detail. It is support. It is acting as a support. Because whenever the market touches the line, the market bounces. It's like you when you step on the ground and you don't go through the ground. It means the ground has supported you. It's like when you jump and you touch the ceiling and you don't go above the ceiling, like here. It means the ceiling has resisted you. The ground has supported you and the ceiling has resisted you. So moving averages do three things. One, trend. They define the trend. They do trend identification. Two, they give us what we call crossovers to show us bullish and market going down. And then they act as support and resistance. Are we running? Are we running? Are we running? Now someone is saying, sing for me again. Me, I only like that singing part. Are you okay? Coach, someone is coming on and he's naked and is distracting us. So Robert, Sebunya, wagenze, naye ekintu kiri wano Sebunya wagenze mu kinaabiro n'oteekako kamera abantu bali eno bali kabulu move ne bannange abantu muli bazibu kati ekya why do you take a camera why do you take a camera surely why do you take a camera in a bathroom? Aha. So you guys, so the following people you have enjoying just. Now there is someone here who is saying, hey, 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 hey. That's why I say, the effect of coronaviruses. So I think you need to switch off your cameras. Yeah, make sure your camera is. By the way, I usually say, when you are coming online, do not multitask. Either do not attend if you will be busy. Because you will suffocate. Hey, but I hope the message is home. Make sure you work on your safety first before you ask for knowledge. Let me tell you, one day, someone joined this call when they are in the bed with the wife. We had just started these online stuffs. They joined the Zoom. They were in the bed with the wife. So I was teaching. Sometimes I join with the two phones. So as I was teaching, someone on another camera was always happy and laughing and enjoying and was not telling me anything. So I thought he was enjoying my session until I realized that the enjoyment was too much on the other person on the camera. So I said, What is happening? Then he started pointing on the camera. There, side D, the other side D, the other side D. I also looked there, and the people, yes, thank you, Farouk. They were enjoying support and resistance. Support, resistance, support, resistance, support, resistance, support, resistance. But I said, we are not yet there. Support, resistance, support, resistance. So make sure your camera is not on. Make sure your camera is not on. Yeah, bullish, bearish, bullish, bearish, bullish, bearish. Not good. But I hope we can now continue. Guys, I cannot see your messages because I joined with one device. Joined with one device. Yes, support resistance. Too much support. Okay. So let's continue. Let's continue. But I hope it's now a little bit safe. It's now a little bit safe. Now there are people who have joined their first time and they're like, I will not be attending because there is always support and resistance. No, don't worry. People will not switch on their cameras again. So you will not see support and resistance. We shall, they have now learned. We have now learned. Okay. Hey, no. Supposed to share my screen. And we go back on the chart. Right. Is my screen visible? Is my screen visible? Is my screen visible? Coach Mo is saying something here. Let me see. Still, some still don't know how to use Zoom features. Video is off. Okay. I have no issue with him. I have no issue with him. I have no issue with him. Chamo Yugi. Chamo Yugi, look for me. Yesterday, the other day, I was activating someone and he had used your link. Since you have been attending these calls, I did not reactivate him. I activated him with your link. Chamo, did you get some bonuses? I prospected someone and he had used your link. I didn't change it. He's from US and I activated him using. Did you get some bonus? And you don't know where it came from? Chamo Yugi. Because I know you, I did not change the link. Look for me. Chamo Yugi. Am I still online? Chamo Yugi. Am I still online? I don't know. Am I still online? Chamo Yugi. Chamo Yugi, type for me a one. Chamo Yugi. If you got some bonuses, I prospected someone and he used your link. I did not change your link. So look for me because I worked hard for you and I didn't change your link. I think I'm one of the few people who can do that. How many people here you can prospect someone, you find use the link of someone you know, and you continue and activate and help them? How many here? How many can do that? How many can do that? Ha, ha, ha. Ah, ha, ha. Ah, ha, ha. Ah, 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 It's not easy. My friend, it is not easy. Chamo, are you in touch with him? Because I see you said you had prospected him. Are you in touch with him? Are you in touch with him? People are hungry. Nobody. Hey, they just delete the account. That's the fact. They don't waste your time. Hey, I give you my link. You don't join me. I block you. You see, it is. I am different. So I activated someone. You see, you are not in touch. Yes, you are not in touch. I thought you were in touch. You are not in touch. I'm the one who has him. Okay. Okay. So come in touch with me, Chamo, so that we join hands and help this guy. And he makes money. He's from the US and he's a very good guy. Okay, so let's continue. So just make sure I know you. When I find someone I know, I'll always do some work for you. So Chamo, look for me on WhatsApp and we help these guys from US and they are very good guys. And he has several guys from US who are willing to do the same. Okay, beautiful, fantastic. So let's continue. So you come here on the plus sign. Let's now put in our moving averages. Come here on indicators or tap on the plus sign if you're using your phone. Come here on indicators and they open. When they open, come on technical. When you come on technical, write in the word moving averages. Moving averages. And they will come in. You will meet what we call moving average, convergence, divergence. This one we are going to discuss it. Moving average exponential, which we have said the EMS, the EMS are here. They ask past, then move. So let's, because so once it gets in the chat, you tap on twice, it will be okay. See the data. But it is not it did not appear. When network cuts you off and you leave this meeting, you can understand that people have been outside for a longer period of time. Okay. All right, so the moving averages are here. And we are going to take an example. The example we are going to use is going to be very simple for everybody. The example we are going to use is going to be very simple. Okay? Now, let's say a 50 moving average. So we turn this to, we tap here on the setting. Then we change this where it is written 9 and let us put 20. So that's the 20. So the method here is simple moving average. So we are going to change it to exponential moving average. Then we come on the style. It is blue. It is blue, which is okay. Blue is one of my good colors. So we are just going to improve its thickness here. The opacity is 100 thickness so that it becomes clear. So that is our 50 moving average. So our 20. So we come here on the setting, on the input here, and we change this to 200. 200. Okay. Instead of simple, we use exponential moving average. Exponential moving average, we change this to 200. This is 200. This one is 200 here. And the style, we put orange. And we make it thick so that it becomes visible in our chart. And so the orange is a 200 moving average. And this one is a 20 moving average. Now, let me squeeze my chart. Okay. Now, have happened, and another is happening here. We have said that a coin will be on an uptrend when a small moving average crosses a big moving average and it remains above it. So here we have a golden cross. And I'm going to show it to you on Royal Q. I'm going to show it on your Royal Q so that you can see it here. So this one is called a golden cross. And I hope you see the market went on an uptrend. Still, you can see here where a big moving average here crossed a small moving average, or a small moving average crossed a big moving average and went below it. The coin went down. And that is the same thing that is trying to happen here. Give me a yes in the chat if it is clear. Now, number two, we said it can act as a support and resistance. First, we said the moving average will always show us the trend of the market. And we said that when candles are forming above it, it's on an uptrend. I hope you can see above it, above it. And when started forming below it, below it, below it, below it, it's on a downtrend. And you see all these candles here have been forming above the 200 moving average. But now when they start forming below it, then we could say the coin is on a downtrend. Number three, we said they act as support and resistance. You see, supported, resisted, supported, resisted, supported, resisted. So they act as a support and resistance. If the 3 points I started to discuss are clear, give me a 1 in the chat. If the 3 points that I discussed about moving averages are clear, give me a 1 in the chat. Now, tomorrow, I told you when I'm starting these classes, I don't teach much. Now, tomorrow, I'm going to, so as a trader, it means that the 200 moving average was looking at the past 200 candles, and the 20 moving average was looking at the past 20 candles. So when you are in your royal queue, now let me come in royal queue. When you are in your royal, someone says how to switch them on. What do you mean? What do you mean by switching them on? I told you, you tap on the plus sign, you look for them, then you tap on them and add them in your chart. I don't understand when you say switching them on. No, I'm in royal queue. Okay, and okay, just a minute, a minute, a minute, a minute, a minute. Okay, I'm in royal queue, and in royal queue, what they have are just moving averages. They're not exponential. Now, royal queue uses a multiple of 5 to create their moving averages. If you are using an iOS, if you are using an Android, it will be different. So in your royal queue, they're using multiples of 5. 5, 10, 20, 30 in royal queue. But if you are checking with your Android, I think Android users, you have a different moving averages. The usual on top here. I hope people can see. The usual on top here. You see, this is 5 and its color orange, 10 and its color green, 20 and its color orange, or I think it looks like orange, 30 and its color purple. If you can see them, give me a yes in the chat. So when you are checking with your Android, for the Android users, the Android users, if you are an Android user, for you, it is a little bit different. So don't complain. Hey, for them, they have 10, 20, for us, it is just that, okay, your software is cannot accept certain things. Your software cannot accept certain things. That's why it is very, 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 very what? Yeah, very problematic and very problem, very problem. Your software, yeah, it is, yeah, you understand. Yes, yes, good, good. So yours can only accept 3, and it is a 99, a 25, and a 7. So don't get confused. I have checked here with a phone of a neighbor. Yes, I have checked here with a phone of a neighbor. But am I still loud and clear? So, so don't get annoyed. I hope. So the other side of Android users, you have a 99, a 25, and a 7. Those of you here, you have a 30, a 20, and a 30, a 20, a 10, and a 5. Now, these things are simple. When I put on these moving averages, it doesn't mean that all of them must do the same thing. But something simple here can happen. But I don't see it happening. So let me choose the coin that has already gone up so that it becomes. We all see these issues of rainbows. I will discuss them later. Can we all see on this coin called Rand? By the way, it's also very, very clear the other side of Android users. You see, it came to a time and all these indicators came in one place. And they made what we call a golden cross. But am I still around? Give me one in the chat. Am I still around? Give me one in the chat if I'm still around. I might be here. Give me one in the chat. You need always to respond. Yes. Okay. You see, they formed what we call a rainbow. A rainbow means that these indicators meet in one place. Let me go back in the past to see. Okay, good. Here it is more clear. Good. Now, there is something just simple that I want to discuss. The 30 moving average is the purple one. Give me a 2 if you can see that. My 30 moving average is the purple one. Give me a 2 if you can see that. I'm trying to just adjust my screen. The 30 moving average is the purple one. Give me a 1 if you can see. And it is at the top. Don't give a 2, I said the 1. It is at the top. It is at the top. Then following is the 20. Then the 10. Then the 5. It means that coin is on a downtrend. All right, I'm back again with another phone. Am I loud and clear? Am I loud and clear? Just confirm with me. I'm back with another device. Am I loud and clear? Okay. Now, I'm using an Android now. I'm using an Android now. Look here. Pay close attention. On an Android phone, this is purple. This is 99. This is 25, and this is 7. When they are following that sequence, the coin is on a downtrend. Give me a 2 if that is clear. When we have 99, then 25, then 7, the coin is on a downtrend. When the sequence changes, let me find the sequence of change. When the sequence changes like here, and we have a 99, a 25, and the 7, the coin is on a downtrend. When the sequence changes, and now we have a 99 below, a 25, then a 7, the coin is on an uptrend. That is how you determine now this coin is on an uptrend because we are starting with a 99 a 25, then a 7. Give me a 1 in the chat if that is clear, because that's what I wanted to show you. Is that hard to see? 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 So when you open a coin that you want to trade, you want to trade a coin. Let me say it is the most negative. Am I still sharing my screen? Yes, it is the most negative. Even let me use these ones that are going to be delisted. Let me use this SLP. Look here. A 99, a 25, a 7. The coin is on an uptrend. But as this coin is on an uptrend, if you want to enter coin, you can always check in the lower time frame and see what is happening, because the whole trend must be the same. Can you see here? A 99, a 25, then a 7. But as this coin is moving, if a 7 crosses a 25, this is a golden cross. Give me a 1 if that is clear. I'm trading and I come in the 15 minutes time frame. I come in a 15 time frame, and the first thing I get is here. A 7 crosses a 25. It is a golden cross, and you see what happened. Have you learned something? It will be knowledge that's being added on over and over and over and over again. Have you learned something today? And those are moving averages. They are important. They help us see market directions. Okay, we need to find out what is the trend of the market. Now, you might be negative about the coin, but how many of us can see here that a 25 moving average has just crossed a 99 moving average? How many of us can see? Now, if I see it, it means that this coin maybe is just, before you get worried that it is already up. Look here. Look here. How many of you are seeing that the crossover has just happened? A 7 has just crossed a 25. How to differentiate those lines? Some of you, I don't know. Are you blind? Are you blind? 99, purple. 25, orange. 7. Don't you see they have different colors? Me, I'm not a magician. A magician. Just see color. Is only it's only milk. Is it easy? It's me who is not very serious. Is it easy to see? Because they have different colors. Someone saying I cannot see them. Friends, can you be able to see? Or it is me who's teaching wrong things? Can you be able to see that this is a different color from this one and from this one? And you can see this one is 99. This one is 25. This one is 7. So the last 25, the 99. Is it seeable or not seeable? Is it seeable or not seeable? Is it seeable or not seeable? Seeable. It is seeable. Now someone is about to say, that is wrong English. That is wrong English. That is wrong English. Use the right pronunciation. Use the English very well. Oh, the English is wrong. Oh, you are using wrong pronunciation. Are you the creator? The good thing is to understand. Are you the creator of the language? Are you the founder? Are you the founder? Hmm? Okay, but the main goal is to make sure that you understand. The main goal is just to make sure that you what? You understand. Okay? So, but sometimes never take me serious. It is just my teaching approach to make sure. I hope today we are able to get a picture about moving averages. The reason why I wanted to start with moving averages is that when you open a chart, for example, you open this coin called the Oki, you can now understand by just looking that a death cross happened here. And you know that the coin is on a pure downward trend. You can now see and say this coin is on a downtrend because it starts with a big moving average, followed by a 25 and followed by a 7. Is that clear? Has everybody understood that? Give me a 1 if it's clear. Give me a 1 if it's clear, because that was my main goal for today. That when you put on moving averages on your chart, you can now be able to tell whether this coin is on a downtrend or whether this coin is on an uptrend. Entries and exits in the markets, when to buy, when to enter. We are going to come up with that in the near future. So when I open the coin and I have my moving averages on the chart, you can now tell the coin is taking a downward movement or the coin is taking an upward movement. Thank you so much for today. We catch up together. Can I only consider 7 and 25? You can consider all. You can consider all. For example, although, for example, let me use 15 minutes. You can consider all. For example, although 25, although 99 is here, how many of us see that a golden cross was formed here? So you can have a bigger picture, but this does not prevent a 7 crossing a 25, and it remains a golden cross. But the overall picture is that the coin is on a downtrend. And how many of us see that the golden cross is about to happen in this corner? Give me a 3 if you can see. Tomorrow I'll talk about a rainbow. But how many of us see that a golden cross is about to happen in this corner here? Okay. So see with your eyes, since me have been able to interpret for you. Have a nice day. Love you all, and bye-bye.